Wait for the stop hunt. Every session has a stop hunt. Stay tuned, traders. We're going to talk about that next. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Hopefully everybody had a good weekend and did some homework. Today we're going to be talking about stop hunts. Again, I need everybody to go back and look at your session timings, review the simple steps, the 12 candle window, mark off your highs and your lows. Every session has a stop hunt. In the 12 candle window, we talk often about the first hour being the trap. Often that may be an extension of a move in an existing trend, or it may be the 1, 2, 3 or the hit to the high or to the low extending out the Asian range or the London range, but it will hit stops. The highs and the lows are what trigger us to be paying attention to be able to position ourselves in the market in either a trend trade or in a reversal trade. And it's really important to understand that, and the easiest way for you to understand that is to go back and mark off the highs and the lows. Don't get caught inside of the swing highs and swing lows. That's where traders get trapped. Eventually the highs and the lows will get hit unless there's a peak formation in place for the session and the market breaks out of a range and extends the range for a breakout, pullback, continuation, and a trend move. In most all other days, both sides of the market usually end up getting hit. So let's review our simple system. And again, I'm going to tell you that every session has a stop hunt. We're going to review some examples from last week. We'll look at today's setups heading into the London session. Structure. We talked about establishing the high and the low Monday, Tuesday, Wednesday, Friday, Monday, Tuesday. We may have a peak formation reversal. We may have a consolidated rectangle. We may have a reversal already in place. A Monday, Tuesday may form the range inside of that for the continuation. But structure is important. We get descending triangles, ascending triangles, double tops, double bottoms, head and shoulder formations. We see a lot of the three push patterns for blow-offs, which again could be interpreted as a head and shoulders or a reverse head and shoulders, but the high and the low of the day. Now it's important, we reviewed this, we'll review it again, identifying the real high and low. So the session, the day itself will paint a high and a low, but it's important to identify if you are inside of existing peak formations from the previous day's sessions or from a previous day's high or low. This will give us a good interpretation of having a thesis for the day. If they're working us into a peak formation and traders are waiting for the stop hunt up top, but they're jamming you in and then shifting it because the stop hunt is actually clearing out orders that are at break even inside of that peak formation. So there's different types of stop hunts. We can have a stop hunt into a strong trend. If the trend is down, the open of the pre-market session may be a stop hunt back into the trend, or they may extend it out 1, 2, 3, and then the open of the market itself, the equity opening times, may be a stop hunt back into the trend for a measured move down or up with an existing strong trend, as we may see today. Friday was a big day. We still have large ranges potentially for these markets to move depending on how they handle the next couple of days of where they're at right now. Timings. 12 candle window. If you go back and mark off those 12 candles, you'll see there's a stop hunt pretty much in every session, 25 to 50 pips, and the move occurs usually in that first 2 hours. In some instances, they'll extend it out over that 3-hour window with a double push or a triple push into a high or a low, which exhausts itself on a 1, 2, 3 for the shift and the stop hunt back to at least the London session or even the high or low of the day. Round numbers. Now we're seeing a bit more often now the quarterly levels showing up. The volatility has gotten a little less since our March craziness. But again, most stop hunts will usually be 25 pips. if the market goes through a quarter level and it blows right through, that's going to be at least a 50 pip stop hunt. A 25 pip stop hunt will stop at the numbers and pin either maybe both sides, it'll consolidate, but it'll work off of that number. It can be a 1, 2, 3 that goes to 83 or 85, for example, but it pulls back around 75, and eventually the market moves from 75. If you chase the fill, you'll get filled at 60. So again, you need to be identifying, just in simple terms, 25 pip boxes. The markets move 50 pips and they break out, they're probably going another 25 pips. Just think in simple terms, numbers. If you hold your hand up in front of your face and stare past it, how many fingers do you see? That was from a famous movie scene in Patch Adams. Don't stare at the price. Look at where price is going and where it's been. Pay attention to the numbers and the timings. If they're moving in 25 pip increments and they've put a pin through in that first 1 hour of the 12 candle window through a high or through a low and then consolidated it, and it's the third push and you're at numbers, pay attention to the numbers, because that's where the move's going to take off from. And if you wait for the candle to shift and take off, you're going to chase price. Very important. Price confirmation. Again, pins, hammers, engulfments. There's usually a second tap to the fill price. So they shift a candle, they always go back and put a bit of heat into the first mouse. Doesn't mean the first mouse is going to get stopped out, but he may have to sit through some heat. Now if there's been 1, 2, 3 and then a shift candle, they may not come back. So a 33 trade that exhausts on the high itself, 1, 2, 3 at the high or at the low, that market may move away quickly because it is going to be in a stop hunt formation. It will take off bar by bar, one after the other. So again, asymmetrical risk reward. As the day unfolds, if you're trading on a 25 pip box, you're targeting, you're probably risking 15 to 20 pips at least for potentially 25 pips. Now if the market's giving you a selling pattern on a 3 push pattern at the high, you could be looking at a measured move. But as the day expands, if the range has expanded and you're in 2 25 pip boxes or 3 25 pip boxes, now you're targeting 50, 75, maybe 100 pips or more with a 1 bar stop. Place your stop, place your target, walk away from the screen. Set a time limit to come back in 45 minutes or 1 hour, whatever it is, except that you could take a loss on that trade, but there's nothing that you can do except interfere now with a possible winning trade. And I've said this before, several of my best trades have come from just putting the entry order in, the stop loss, and the target, and walking away and not messing up the trade by trying to figure out when to go to break even or moving my stop or trailing or watching it go back and forth and stressing me out. Once you're in the trade, you can't do anything except control your loss and your profit. So walk away from the screen, don't mess up the trade, get out of your own way. So let's take a look at what I'm talking about. Okay, again, if we look at our first hour, okay, and then our second hour, which is when the market opens. And again, I'm going to say this, pick 2 or 3 setups. Maybe it's a 1, 2, 3 over 3 sessions to a high or to a low. What is your weekly structure? What is your thesis? Are we in a Monday, Tuesday? Maybe we're just in a range right now. Where is your high and your low? What are the setups that you're looking for? Are you looking for an extended out London session for the New York reversal? Are you looking for a sell high after 3 sessions? Are you looking for a 50 pip stop hunt to the low of the week or the high of the week? Again, pick 1 or 2 setups, have your strike zones, know where your levels are, your round numbers. Okay, so if we're here and we got, say, 250 pip or so 225 pip boxes, 50, 75 and 100, okay, and Asia's traded in this range, okay, that doesn't look like a low or a high of the day in terms of a peak formation. But we wait for Europe, and sure enough, they come out and they hit it. Okay, so now we're 25 pips out. Is it 3 pushes? Is it 940 or 2:45, 3 o'clock, 3 a.m. New York Eastern Standard Time, have they given us any indication that this could be the 25 pip stop hunt? Now we've got a 50 pip target, okay, if it goes back to the high of the day. We're not taking this just blindly at the numbers. We need London to, if that's a 1, 2, 3, we can certainly enter in and be looking for this market to come back strongly on a stop hunt or a hit to the high. But London could also come back and hit it again, okay? So do you know what your best trade setup looks like after the stop hunt? If they've gone 3 sessions and they've gone, you know, as we talked about last week, Asia, London, and then New York opens up here after a 1, 2, 3 at 9 a.m. New York, and they're consolidating at the numbers with back and forth. Get in. Put your stop in place. Put your 50 pip target at the low of the day, or your 75 pip target in at the low of the day, or the high of the day, whatever it is. Come back in 1 hour. Set an alert, a price alert. If it moves 25 or 35 pips, and you feel that the market has cleared these levels or hit stops, consolidated and continued, go to break even. Reassess, am I looking for a measured move? Is it going to stall out at the low of the day? What is it that it's going to do? Have a plan. Know what you're looking for. Where's the overall high and low of the week? Is there a measured move from a peak formation from Monday, Tuesday for a full extension of the move down for maybe 150 pips? But in that first 12 candles, okay, if they haven't hit the stops, if you're in a trend, okay, I'll write this out again. Okay, if you're in a trend and we get to the New York Open, okay, so they may have extended this out 1, 2, 3, and you're saying, yeah, but I'm waiting for the New York reversal. Okay, Stacey said there's going to be a New York reversal. No, I didn't. What I said was the market's going to move in this 12 candle window. New York might open up, or in that first half an hour, they might come back and go 1, 2, 3. Okay? 1, 2, 3, and then come back in the last part of the hour and come back down to the low of the day and do a measured move. Or they might come through the low, pull it back, work it one more time, and then give you a reversal pattern in that third hour. But in a strongly moving market, the stop hunt will usually go against the trend. So again, a couple weeks ago we had an example on the pound Swiss. Some people took that trade short on a 1, 2, 3, okay? But that market, we had an Asian high. The market in the second 3 hours went higher, and they went higher, and then at the Europe Open they went 1, 2, 3, and people shorted that, okay? That's a trend. Then London opens up and goes back through the high, okay? Then it does a creeper down inside of that peak formation, and then they shifted it away and went, I don't know, 75 or 100 pips. Keep things simple, okay? Consolidations, high and low. The swings inside are trapping traders in both directions, and then they'll come out exactly at these times, okay? So no matter how good it looks, unless you are at the low or the high of the overall day, they are coming to get you. They will hit your stops. Every session has a stop hunt. And again, print your charts off, mark off the highs and lows, look at the timings. Very important. And you know what? If it's not a good setup, why are you trying to trade it? Don't look for trying to trade every move. Don't look for garbage. Look for the best trade setups. Again, if we have a market that over the course of the day has given us a 1, 2, 3 in 3 sessions, New York opens up here, and our week is down, and we got a peak formation from the day before, okay, and you got 75 or 100 pips and 3 higher lows. What that are, those are stop losses, okay? That's orders. They're building up stop losses so that when they come out of there, boom, they can clear that out. That's money. That's money that they're going to take off the board. don't chase this stuff up here, okay? If you're chasing this, make sure you're taking something off the table every time they pull back. Take some money off, whatever, but get ready, because when the market opens, there's going to be a stop hunt, and they're going to get the money, whether it's up top or down below. So know exactly where your highs and your real highs and lows are, the highs and the lows of the day, as well as the peak formation. So we'll look at some specific examples right now. But again, if you're chasing price or the market pulls away, okay, if it's pulling away, they're making you get a worse fill. So whether you think you're chasing price or not isn't the case. You're getting a worse fill. When the market goes up to a high or to a low, and they go into consolidation for 2, 4, maybe even 6 bars just before the market opens, that's where you get in. That's where you put your stop. The market takes off at the open and shifts in the other direction. Trapping traders up high, higher level longs, lower level shorts, shift the market. 3 levels of trapping traders all the way down, shift it in 2 or 3 bars, hit the stops, take the money off the board, and call it a day. That's where we want to position ourselves. So again, we're not trying to catch every single move. Step back, look at the big picture, look for the best setups, and remember, as the week unfolds, so does our high and our low structure for bigger ranges and range expansions for 5, 6, maybe 10 to 1 in terms of risk reward. So hopefully you got some value out of today's video, traders. Focus on 2 or 3 very precise setups. Focus on where you're going to execute, getting the best fill at or near numbers, 1 bar stops, 3, 4, 5 plus times your target based on where the stops are, and also how price behavior is, and also where we're at in that weekly structure. Stay disciplined, stay focused, keep getting better, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading, continuing our discussion on there's a stop hunt every session, and I sort of have a golden rule, and typically in that 12 candle window, I think it's important often, especially in that first hour, to look for, obviously we look at our big structure, but we look at consolidated ranges, and you want to see the market start to break out to one side or the other, and either break out for a breakout pullback and a continuation, or a breakout stop hunt reversal, possibly with the right price action confirming an entry for an asymmetrical target on the other side. And obviously you're looking hopefully for 25 to 50 pip ranges, either continuation moves or stop hunt reversals. And sometimes, as we've seen today, they can build something up over 3 hours before they move the market. But we'll look at some examples today. I think it's important to just each session, go into the session looking at your charts, knowing where we talked about the real high and low, recognizing where they jam traders inside. But each session, if you draw your highs and lows in Asia, we had a news release on this particular day, but we redraw our highs and lows. They come out of into the Europe session in that first hour, 1, 2, 3 to the high, they hit the stops, reverse the market, and go to the other side where there are stop losses in place. And again, traders go long, retail traders go long, they get filled somewhere between, the low and halfway before the market breaks out. They might go to break even, or they might have took profit, or they might be hoping this keeps going and they're in a big trend, and bang, one candle comes back and basically takes them out either at break even, maybe with a small loss, or the next candle gets them. You'll notice when a stop hunt occurs, it moves quite quickly, and the reason why that is that when they have traders trapped, and usually their fill prices will be somewhere in the middle of a move. So often we talk about getting filled at or near the numbers, because these 25 pip boxes, obviously this is almost a 75 pip range, but you'll see where they've jammed you in, down low or up high in the middle, so then they can shift the market and hit the stops. And again, the colored boxes, the blue is Asia, the pink is the Europe, London, and of course the yellow is New York. We redraw our highs and lows, and of course the market comes down and hits the stops, and we have an example of a market that in the first hour, hits the stops. They pull it back in the New York session in the open of the market. They move it 25 plus pips, stop hunting traders that are short. So again, there's a stop hunt to the low and also one back into the trend before a 1-2 sideways 3 pin hammers, hit the lows one more time, and then shift the market back for 50 plus pips. Again, stopping out traders who shorted the move into the low of the session. Every session there's a stop hunt. It doesn't matter which pair we look at. This was a news release. They went 1, 2, 3. They cleared out the highs of the week, dropped it down, went sideways into the Europe Open, came back, stop hunted traders, either a break even or with a loss, who chased this move up on a smaller time frame, possibly even tried to swing through on the follow through. And again, Europe, London, they hit the stops, they shifted 50 pips. Drop it down, consolidate, move it up, move it back, and hit the stops again up top on traders that might have shorted the initial move down. And again, they go into consolidation at the round numbers with a 1 push, 2 push, 3 pushes into the US Open before dropping it down and stopping out traders who chased the follow through on the long trade and on the traders who got it right off the low of the session. And again, we go into the next day. We get a high of the day and a low of the day. Again, we talked about sticking to the outside. You can see Asia gets traders inside the highs and lows before eventually in the Europe Open going down 1, 2, 3 to the bottom, hitting the stops, pulling it back, hitting them a second time. And you'll notice that the Europe London high is lower than the Asian high. Again, catching traders following the trend down, hitting stops on the late longs into the open of the Europe Open, and hitting the stops at the top of the day. Again, they come back in the US session, pull back inside of the high, and then take out the lows from the Europe London Open. We go on to the next day, which is today. They opened on a gap, taking out the low of the session, opening on a gap for traders who possibly had stops below the low of this bull candle. But of course, they would have got filled at the first price, which is probably worse than what their stop loss was if it was below the candle. The market makes a new high and a new low in Asia, and we come into the Europe-London session, and you can see again today an example of where they get traders with the lower highs chasing that trend down before they come back. They haven't taken out the highs yet, but of course they've got traders at break even. And then they come back 1, 2, 3 to pin the low and get traders possibly who have gone long off the bottom. And they may have had their stops somewhere underneath in this area. Now, it doesn't matter what pair you follow. You can go and look at the pound. You can go look at any of these pairs. It's the same thing every single day, which is why if you've missed a move in Asia, don't chase it. Let them give you the new high and the new low. Come back in the next session, whether it's London or New York. Redraw your highs. You've got the high of the day and the low of the day. And at some point, they're going to eventually, especially as the day progresses and we have the 3 sessions unfolding, they may end up working the low and giving you an ideal opportunity to enter the market. And it may not. But the whole point is, do not chase the trades. There's going to be plenty of trades. Wait for the stop hunt. There's one every single session. Whether they come back and they work the high with 1, 2 push, 3 pushes to the high, drop it down, they come back to stop hunt, 3 pushes down again. And again, you're going to get days like this that are choppy and sideways. Stay to the outside. If it doesn't fit your ideal criteria, then wait for something better. So again, we saw Friday, when they have a sideways consolidation day, you can pretty much assure yourself that the next day potentially has a possibility of being a big day. We went up to the high of the days in the end of the session. They extended that and came back inside of the range, dropping it down into the Asian session, making a new low, pulling it back, and then breaking through, hitting the highs of the day again on traders that were short. So we get the Europe Open, we go into the London Open, they pin the high, they stop out traders who were short, either a break even or with a loss. We get a breakdown and a pullback. They stop hunt traders who are long, and then they come back before they move it down further to get traders who are short, at least at break even, make them uncomfortable before continuing that move down, stopping out traders who were long, hitting the stops from Thursday's lows. And then, of course, again, here's an example of a trend trade. They pull it back at the U.S. Open, so they extended the range down in that first hour. And then one big stop hunt candle, an inside bar, sideways consolidation. So I mentioned in the first part of the video, wait for the market to go into consolidation and then enter in at the numbers. Very important. As opposed to chasing a market that's on a runaway, and possibly if you're already positioned in there, that's fine. But if you're chasing the market, you have the high probability of, again, getting stopped out or trapped inside in the middle, where they will come back and possibly jam you in for a loss or at least hit your stops. So wait for the market to go into consolidation. The markets are going to move when they open. And again, there is a stop hunt every session, whether it's a continuation, a trend trade, or a move back into the trend, or a breakout of a consolidation. And as we see, we're heading into the U.S. session in the next couple hours. We may get another hit to the high on traders who are shorting this market right now, and either a reversal back down to the lows of London, or a pullback and a continuation for a move to stop hunt traders who were short in the U.S. session on Friday. So again, every session there is a stop hunt. Stay to the outside, wait for the market to go into consolidation, and even if it's only 25 to 30 pips, sometimes the daily ranges as we progress throughout the session will give us 3 higher lows for a possible U.S. session reversal in a move back down to the lows of the day. So hopefully you got some value out of today's video, traders. Stay to the outside. There will be a stop hunt every session. If you are trading in the middle, be prepared to either get caught in the middle on a stop hunt or possibly jammed in for a bigger loss or taking on more risk. Stay to the outside, wait for the simple trades, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.